Energy stocks fueling a rally on Wall Street Tuesday on word the Saudis will voluntarily cut oil output. For more on that and the outlook for the markets, we're joined by Nick Colas of DataTrek Research. Happy New Year and welcome, Nick.
Happy New Year.
Thank you. Well, oil prices are spiking 5% at this hour. Energy stocks up 7%. Marathon oil up nearly 14%. We saw this momentum in energy in the fourth quarter. Do you see that continuing? And what role does the Saudi move today play in this?
Oh, you're right. The Saudi move is very helpful in terms of putting some support underneath oil prices and giving people a sense of where supply is going to be. So that's a critical part of the equation, but we're focused more on the demand side of the equation. And that's where the oil trade really, I think, comes into its own. If you believe, as we do, in a pretty strong, robust economic recovery in 2021, oil is going to have a lot more to go. Traditionally speaking, oil should go up between 60 and 80% from the lows in a cyclical recovery, and that would put us between $60 and $70 a barrel sometime this year. And against that backdrop, it makes total sense the energy sector is working. We like it as a group. We think it's one of the few value trades that actually works this year. And so, yeah, this is pretty much as we expect it to be.
And cyclical stocks, I know, are part of the areas that the strategists are saying should be moving into. Do you agree that energy is one of those areas?
Energy is absolutely one of those areas that got so beat up last year. Energy is the smallest single sector in the S&P 500 today, which is amazing when you think that it was north of 10% just a decade ago. So it's gotten crushed over the past decade. It should have some mean reversion coming due.
And Nick, even before this rally in energy today, we saw the markets opened higher today compared to the sell-off, the sharp sell-off that we saw yesterday, especially midday. How should we interpret yesterday, the first trading day of the year? Was this a blip, or is this a change in investor sentiment?
We're taking it as a blip. You know, we had a very strong rally in Q4, as you noted, a nice little Santa Claus rally at year end. And so some pullback, I think, was to be expected. The Georgia Senate races obviously play a little bit of a role in terms of investor uncertainty. But we looked at this data, and we're actually doing this math for our report tonight for clients, and found that the first day and the first week of the year have very little information signal about how the year is going to go. Less than 5% are squared, statistically speaking. So we shouldn't worry too much about what happens in the first day or the first week. Now, the first month, how January goes, that is pretty important. So we're not writing off the whole month. But the first couple of days, not that important.
And since you mentioned the Georgia Senate runoff, which is going on as we speak, are investors, based on today's action, showing that they're a little bit more comfortable with the idea of a possibility of a Democratic sweep in Georgia the same way they were in the fall with the possibility of a blue wave, which didn't happen?
Yeah, it's a really important and it's a great question. Look, I think investors still are very torn because on the one hand, a Democratic administration and Congress means more stimulus. That's pretty clear. On the flip side, you don't want to see tax policy rolled back, but so far. And so I think the market's going to really struggle. And whenever we get the outcome of these elections, could be tonight, could be tomorrow, could be next week, investors will have to play that tug of war and figure out where they stand. It's not clear that it's going to have a material impact on stock prices, but it could create some volatility.
And lastly, Nick, since you're one of the first earlier writers on Bitcoin, today JPMorgan out with a note saying that they expect Bitcoin could possibly rise up to $146,000 if it becomes an accepted, a de facto sort of safe haven asset. Of course, it's trading around 33,000 today. What do you make of this target of 146?
You know, anything with Bitcoin has to be a big target because the thing has so much volatility. So in that context, that's the equivalent of saying the S&P will get to 5,000 one day. You know, probably will. It's not that far away, and the volatility fits the price target. What I'd say is that for people interested in Bitcoin, I always have called this a lunch money investment. You put whatever you've ever spent the most on lunch into the asset and wait 5 to 10 years. Either you'll have lost a lunch or you'll have many, many more lunches. It's a very speculative asset with a lot of volatility. I get where JPMorgan's coming from. Theoretically, I think they're absolutely right. It could be in a year, it could be in 10 years. We just don't know.
Right. There was no target in terms of the time span there. Totally out there. But thanks a lot, Nick, for sharing your thoughts on all these various subjects today.
Sure thing.
Our thanks to Nick Colas of DataTrek Research. I'm Fred Katayama in New York. This is Reuters.